Welcome. Let's take a look now at some individual charts and some technical analysis around some of the big charts that clients are following at the moment. And of course, one of the big themes is what's going on with central banks. And it certainly seems like the Bank of England is happy raising interest rates, as indeed, of course, as we know, also the European Central Bank. Some suggestions the Fed's beginning to take its foot off the pedal a little bit, and the possibility that we could well see a pause a little bit later on in the year in US interest rate rises. Now, this is giving us steer to all sorts of currency markets. But at the same time, of course, here in the UK, we have a situation where we've got record highs on the FTSE 100. And we've been asked a lot of questions by clients about just how to trade this market and how much further up it can go on what is at the moment an interesting trend. Let's introduce our guest. Now, for the next 15 minutes, it's Patricia Elbaz from Financial Trends. Welcome.
Hi, Jeremy.
As a trader of the market and someone that deals in technical analysis, these are interesting times. Fundamentally, there's some interesting underpinning of some of these markets. I know we're going to take a look at some of the big currency markets at the moment. What's your overarching thought?
So overall, we have seen sterling struggling. And what's interesting in the charts that we're going to see shortly is that there is a range. The range top is 124.50, 125. And even though sterling has been going down, we're still always going back up above the 120 pivotal level. So that's something which is quite significant for the medium term.
So you're buying above 120 but selling below? I mean, if it was to dip down again and confound us and go in the opposite direction, those that were long, of course, presumably would be stopped out. But if there's a short opportunity, would you want it to see much below 120 before taking a short position?
I think at the moment we're around 120, 140, so we have seen a bounce since. So if we do dip towards 121 to 120.80, I think that would be the time to put the stop at 120 and go for a long position then. Yes. Interestingly enough as well, moving averages, they're useful, but they are time lagging indicators. But I like to see when there's a crossover.
So what have you got on here? You've got the 200-day moving average and the 50.
We've got the 50 and 200. 50 and 200, they've crossed each other, which is a buy signal.
So the crosses when the 20 moves above the 200, that is, 50 moves above 200, that's a positive signal. Right. So is that a golden cross?
It is a golden cross, that's right. And when they're both moving on the upside, it's even a stronger signal. So the 50 above 200 when they're both heading higher. So interestingly enough, we have had that crossover. And the reason why I always say it's time lagging, because, you know, you get your buy signal here, but obviously we've dipped since 105. So it's been quite a long way off. But very, very significant that we have had the crossover. Watch for 120 being our floor for the time being and see if we can challenge the top of the range.
Let's stay with the charts because I wanted to move on to take a look at the next one, which is the same chart, but it's a lot more focused in. This is sterling dollar with candles, and you've drawn this nice parallel box that you've got here, lines with parallel lines on it.
Yes.
And what's this telling you?
So here, interestingly, Jeremy, I found 4 simultaneous reversal patterns. And I always think it's good to see when the candlesticks work, because obviously they don't always work, like everything. And in this case, you have 2 haramis and 2 bullish engulfing, which are highlighted there.
So what's a harami candle?
So a harami candle would be a candle within a candle. So no strong move on the upside or downside, and it's usually a pause. In this case, it can be a pause, a reversal. So we've had 2 reversals here. And the most recent one that we have here, which is just a few days ago, was the bullish engulfing. And again, that could show that there is a chance that we tackle the top of the range.
And this one on the far right-hand side, we were talking before we went into the interview that this is bearing out your point that you've got more potential upside than you have downside.
That's right. You're making a series of higher lows, but we haven't confirmed the higher highs, and that's what we're waiting in order to have the clear bullish signal. So we are within a range, undoubtedly, but there is a sign that it could be a positive move here.
Okay, let's move on to the next area of interest, which, as I said, is the European Central Bank raising interest rates. Same sort of pace that we've got against the sterling, the Bank of England and European Central Bank raising it 50 basis points. The Fed has pulled back. So the euro-dollar trade is interesting. That's the fundamental side of this. If we look at what we've got in terms of euro-dollar long-term chart, if we can bring this up and take a look at what we've got here, we've got the 250 period moving averages here on this again. But the euro's just trading over the 107
yes,
level
currently. Yes, so it is holding above. It just bounced off the support there, the 50-day moving average, if we can see, just touched on it. And we're currently around 107.70. So a little bit of an uptick here, not as strong as the one we saw in sterling dollar, but there is a chance that if we can regain 108, 110 could be our medium term. It's like the top of the range and the medium-term target.
So again, if you were to go long on this, stock goes how far down below where we are?
So I would look at 106.50 to 106.60 as the big support.
When we went into the interview, I was talking about some of the other aspects of the markets. And as I said, if you listed all the questions we were getting from clients, I guess the FTSE 100 record is probably up there with gold and the euro dollar. And it's this idea about where and how to trade markets that go into record levels, because you're then in pretty much uncharted territory, because you've got the trend in place. Some people think it's an opportunity to sell, but of course then they get caught short, they got caught wrong in the market, and they lose out. So we're looking here at a FTSE 100, and that question will be in amongst the questions I'm going to ask you, is how much higher it can go. But you've drawn a parallel channel here which has sort of disappeared up from where we are. How do you read where we are in the FTSE?
Yes, so as you say, we've got a parallel channel here. And the reason why I wanted to draw that is to show that since 2020, we've put in this channel. It was impulsive, and then we had a whole period in 2022 of range. So it was really within the range that we saw, 7,500, around 7,100 for a long time. And now we, as you say, historic highs at the moment, and there are still quite a lot of skeptics out there saying, are we getting towards the top? If we look at it here, there is no reason to call a top. 8,000 would be the big psychological
it's a nice round
level.
number. We're so close.
Yes, we are so close. We record highs, we're comfortably above 7,900, which was quite a significant level. So 8,000, and if we look at the range that we saw throughout 2022, if we have a range extension where you extend the whole level that you've seen, it actually gives us a target of 8,400.
Okay, so that then gets onto this question about how much further up a record market will go. So you use price extensions. What's the general